Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Bati. Good morning, Ayo. Good morning, Rufai, and all our viewers out there. We begin, of course, with oil. Still looking at the rate cuts, which, raised prices just a tad. Also, the situation in Lebanon, not really moving that much. Oil is still in its $70 range. So Brent crude, 73.86, 29 basis points in the green zone. North American grade, that's West Texas Intermediates, just 0.1 there, $70, although it's still in the $70 range. Of course, Nigeria's benchmark, 77.96. Natural gas at 2.29. I think I heard you read it in the headlines, but in Lebanon there's been more device explosions. We understand it was handheld walkie-talkies and other electronic devices that went off. Even had it happened at a funeral of one of the people that died on Tuesday. So at least the death toll now it's at 32. An additional 20 people were killed. Another 450 people were injured. Still no comment from Israel, but we understand that Hezbollah leader Hassan Nasrallah is supposed to speak later today. Hezbollah right now is in disarray because because again Israel has not spoken, but allegedly Israel is behind this, and they have really hit them hard in communications. And which, if you think about how we are supposed to be fighting terrorism here, and fighting about how terrorism is supposed to be fought across the world, you have to hit them where it hurts. So now they don't know whether to use pagers or walkie-talkies or mobile phones. It's going to be very interesting. But of course, there's still the fear of retaliation because Iran has said they will retaliate for their ambassador to Lebanon being injured as well. We move to Asian stocks. Asian markets largely positive following the rate cuts from the United States. You'll see that only the Kospi in Korea in early trading was in the negative region. But the Shanghai Composite Index in mainland China, the Nikkei 225, the Hang Seng, were all in the positive place. So look, we got the 50 basis point cuts from the Federal Reserve. If we take a look at the summary of that, so now the Fed funds rate is between 4.75 to 5%. Very interesting. The vote was almost unanimous. Jerome Powell has always said he wants full consensus on these things, but we did get a dissent from Michelle Bowman. I think she was the state commissioner for the State Bank of Kansas. She actually is the first FOMC or first governor to dissent, I think, since 2005. Be that as it may, this is the first rate cut we're seeing since 2020. Powell said, look, the U.S. economy is pretty strong, and there were a lot of questions. He got peppered by a lot of questions on the labor market. So, of course, the private sector started weighing in. Do listen to, and this is lessons for everybody. Nick Pinchuk, he's the CEO of a company called Snap-on. They are a manufacturing company that works in the automobile sector. He was talking about the labor market, and listen to what he says about the need to upskill workers.
Raise a point that one of the seminal issues of our day, one of the most important things we can do in America, is to expand and upskill the American workforce. Because manufacturing is great, but there are 505,000 National Association of Manufacturers says there are 505,000 manufacturing jobs open today. We can't fill them partially because we don't have the skills. So manufacturing is essential for our future. It's been essential for our past. It will be essential for our future. And we need to upskill the American workforce in a whole group of ways so that they can do these technical jobs. They can do those technical jobs. Because, see, that's our strength. 300 million people, 360 million people, we arm them with these technical skills. Yeah. No other country can stand against America. Nick.
If we arm them with the technical skills, no other country can stand against America. This is why I talk about technology all the time. Software development, and thankfully I got that Microsoft thing. We'll play that tomorrow because we focus on technology on the Global Business Report. Let's get to Ghana. Ghana, really, I don't know if maybe this is a base effect because that's, you're comparing GDP year on year, right, when you annualize it, but 6.9% in the second quarter for the land of the Black Stars. You can see first quarter GDP performance, first 3 months of the year was revised upwards to 4.7%. The median forecast from economists was 3.3. So Ghana, I think there's been a lot of negative talk with where Ghana, the CD falling, the debt restructuring, but Ghana is slowly powering up. The industrial sector grew by 9.3%. In Q1 was 6.8. Agriculture did 5.4. So Ghana is slowly getting up there. We all talk about America. There is an election coming up in Ghana this year. Nana Akufo-Addo is stepping down. He's done 8 years. So his VP VP. It's not only Kamala Harris, VP, that's running for office here, but Mia, he is also running, and he's going to like these numbers. We understand that the government's, he's of course with the ruling party. If we look at his promises, he wants to average 6% GDP growth. That seems to be a magic number in Western Africa. He wants to average 6% GDP growth in Ghana. He wants to boost agriculture, mining projects. He wants to use technology to improve government efficiency. And he says he wants to have a more friendly tax regime. If you've been to Ghana and you've had a meal there, the cost of living there is really, really high. December 7th, there is yet another big election this year. We'll see who takes Ghana forward. Yeah, the Central Bank of Nigeria is on the front page today on the electronic the fees, right? But I think we need to clear up yesterday's headlines, which unfortunately a number of papers ran with, which was that according to the reports the CBN released way back in January, that somehow removing fuel subsidies has an impact on FX reserves. So we pulled the excerpt from that circular. If you read it there, it says, and by the way, the first part says that the central bank sees positive growth in the Nigerian economy. Then it says in this quote you're looking at now, however, lower crude oil earnings, fuel subsidy removal, rising import bills, and increased external debt servicing obligations could pose downside risks for the accretion to external reserves. Bizarre. I mean, they've acknowledged that it's a mistake. They've taken it down. But, you know, just for any non-believers out there, we put up a pop quiz, yeah? Just to take us back to when we were in school during simple multiple choice. So if anyone wants to take a stab at this, which has no impact on FX reserves? Is it crude oil earnings? Is it fuel subsidy removal? Is it rising import bills and or external debt servicing? Just simple critical thinking and deductive reasoning. Crude oil earnings are in FX, so that adds to the reserves. Import bills are settling imports that come in. That's also in dollars. So you have to use your reserves to settle the number of months of imports whenever we talk about reserves. And then your external debt servicing is debt servicing in dollars. So of course that will impact it. So the answer is B. Reducing fuel subsidies or not paying them saves you money. So how on earth can that impact your FX reserves? Finally, Bismarck Rewane, economist, managing director, CEO of Financial Derivatives Company Limited. He was on television yesterday talking about the cost price of doing business, referencing the Dangote refinery. He says here, what Dangote refinery is assuring the country is quality and quantity, but that pricing is not necessarily in the hands of the refinery itself, but in the hands of the market. He continues, the market determines the price, including the global crude price, guaranteed margin, and the cost of processing. It's as simple as that. Nobody goes into business to sell below its cost price. If not, it's suicidal. That's our update for today.
Okay, so a couple of things, and I want to set this straight. Number one, America is cutting interest rates now. If you see an uptick in the Naira against the dollar, don't let anybody lie to you that it's government policy. It's because America is cutting interest rates. Loans are going to be also cheaper on the international scene. You are going to see a lot of hot money. Investors will swarm in and look for markets. Don't let anybody deceive you. It is because America has cut interest rate for the first time in 4 years. I just need to get that out of the room. Secondly, the CBN now coming to say, oh, it was a mistake they put in there. The truth is, I don't think that was a mistake. You are asking for how the, affects the reserve one way or the other. See, once you remove subsidies and with the flotation of the Naira, you are left in dire straits. There are many knock-on effects that happen because of those two policies. Number one, a massive level of inflation that trickles down. And with the flotation of the Naira, it was a double whammy for killing, because now it is the same Naira that they are taking out of it to defend the, they are taking out of the reserves to defend the dollar. So these decisions were terrible for the people. Let the CBN stop deceiving us. And that's why they are looking more for money everywhere. Right, they've gone back now to bring in that electronic cybersecurity levy. Taxing the people, killing the people.
All right, let me go to Ghana. And the report says
sorry, so Ari, just one quick point.
Go ahead.
2 quick points. Just let's take it to a logical conclusion. So when Rufai says, don't let anybody lie to you, the reason why the Naira is appreciating is because the US is cutting interest rates. That is called a differential. So what that means is that if your rates in the US are lower and Nigeria's rates are higher, you actually earn more. The interest rate differential is more positive if you go to a country that has higher interest rates. So it's not about lying to you, it's just simple math, right? It happened in Japan. That's why the yen is appreciating, because we talked about that 2 days ago. The yen appreciated because the Bank of Japan raised interest rates. The US is anticipated to, as it's done now, cut. So Japanese securities become more attractive, and people want to get those securities. Foreign portfolio investment goes into Japan, it rises. Let's not maybe emotional, it's just simple math. Okay, we are talking not about the people here. We're talking about appreciation to, appreciation to reserves.
Okay.
When you float the Naira, 1 second, when you float the Naira, you defend it less because you allow market forces to take play. So when you float the Naira, your reserves actually appreciate because you're not defending a fixed exchange rate. So just stick with the math and be straightforward.
All right, Rotus, very quickly, because of our time, I was just going to talk about Ghana and 6.9% growth in GDP and just some of the drivers. The services sector and the agricultural sector has contributed significantly, seen growth, first time in about a few months. And then the first thing I wanted to talk about, or the one thing I wanted to talk about was that when it comes to agriculture, they've invested in that sector. And the cocoa, despite the challenges that have been faced in the country as a result of adverse weather conditions, we've seen smuggling and the likes, they've still been able to see a growth in the agricultural sector, contributing to growth in their GDP. Now, looking forward is how they can fully recover. They've seen quarter to quarter rise in their GDP to see how this will be sustained. Like you said, it's an election year. The ruling party will be capitalizing on this and seeing how they can use that to sell to the people that they are finally getting the economy right, despite the fact that they are undergoing restructuring with the IMF.
Well, first, I object to this segment being turned into unnecessary argumentation. People should just express their views in a professional manner. So turning this into an argument back and forth is not necessary. It destabilizes, a team that is addressing, issues. However, let me now make my point as follows. What happened at the U.S. yesterday was an aggressive stance, the first time in 4 years that the central bank, the U.S. central bank, will take that decision. And already, as you have seen, it has had reverberations, not just in the U.S. market, but in other markets globally. The first is that, the jumbo size caught the stock market in the U.S., in a surprising mood. First, the market was volatile. Traders and investors were a bit surprised. But the bigger issue is the implication. One, this is happening under the Democrats. Will it give Kamala Harris an advantage? Because mortgages will go down, loans, will be easier to pay, the cost of borrowing will go down. What the Federal Reserve was trying to do is to balance inflation and also the employment market that is cooling. But we should also pay attention to the dot plot. They have said there will be another cut, 50 basis points, later this year, a 1% percentage point cut in 2025, and then in 2026, another half percentage point. Now, it shows confidence that inflation is going down. But the bigger effect is that there will be reverberations in other parts of the world. Now, New Zealand, UK, the European Union, they even cut rates before the US. So the US is welcome to the party. But I saw a story in Nairametrics, and that is to the point about the global impact. Nairametrics was writing that, look, Nigeria should also pay attention to what has happened in the US, because we have more federal, foreign portfolio investments. The MPC of Nigeria is meeting next week. They are likely to follow the lead and also probably cut rates. But we still have problems in Nigeria with imported inflation. How do we manage all of that? We'll see next week. But today, the Bank of England is also going to make a statement about interest rate. The expectation among economists and investors is that they are likely to hold rates. Inflation data came out yesterday, and Andrew Bailey is saying, well, they are not under pressure. But would the US achieve the target of 2% as the EU is also expecting. That is it. But please, can we act professional in this segment and everybody behave themselves? I get irritated by unnecessary arguments.